What's going on, everybody? Welcome back to Be the Trader. Today, I have a very special guest. If you have not seen him on TraderTV live on YouTube, you definitely need to check them out. They do live pretty much every day in the market open, and they kind of give you a grasp of what it's like to trade as a day trader. And today, I have one of their traders, Brendan. Brendan, welcome to the show, my friend. I appreciate you being here.
I appreciate you having us, Alex. Yeah, it's an exciting time in the market, an exciting time to talk about the market. So always happy to do so.
Absolutely, man. I found you guys, and I'm always looking for great people who are trying to deliver great information and help people out just to help. And the fact that I found y'all, I watched some of y'all's stuff, and I was like, man, you guys are really trying to help people out and share it without this, there's just different ways of doing it. And I feel like you guys are doing it right. So I wanted to talk with y'all briefly, and just for everyone who's listening on the show or watching on YouTube, I'm going to have each one of you guys, they have multiple traders, come on the show, so stay tuned for that. But Brendan, let's start with you, my friend. Can you share with us a little bit about what got you into trading to begin with?
Sure. So I actually have a media background. So I actually went to school for media, for broadcasting. I started my professional life in radio, of all places, and was reporting traffic, weather, news, and in the later stages of my radio career was reporting on business news. So I became very heavily, attentive to what was going on in the markets every single day. I was doing a business report pre-market every single day, and then one after market every single day for a network of radio stations right across our country. We're obviously up here in Canada. So that was kind of my first exposure to equity markets, and kind of exposed me to the fact that I had, a very strong interest in it. Started kind of dabbling myself. I would see, news happening and just think, only if I had a little bit in and only if I had a little bit out kind of thing. So I started managing my own account that way. And then one thing led to another. And here I am. I thought, you know what? I got to do this full time.
And how long did it take you to get to that moment where you're now able to trade full time and just enjoy doing what you do every day?
It's been a ride. I mean, I think everyone who has tried to get into trading has their own story, very unique story typically, but it's been a ride. I came to Day Trade the World. We were here on a Day Trade the World trading floor, 300 offices worldwide. It's a proprietary trading firm, not in the US because of regulatory issues, but everywhere else in the entire world. So I came here in 2013 and started actually on Asian equity markets and Australian equity markets in an overnight type of setting. So we're in the Eastern time frame. So those markets open kind of, 7 p.m. on for us here. So that kind of let me, trade at night, but also still keep some time or some type of a job during the day, which is so important when you're first, starting out as a trader, as I'm sure you know, to have some sort of financial footing and some sort of stability on the financial side of things, so you can really focus on getting into doing what you do best when it comes to trading.
And can you elaborate on why that's so important for someone who may be on the fence right now and just frustrated with what they're doing, and they're like, man, I want to start trading, why they should probably keep that job?
Yeah, listen, it's trading's hard. I'm not going to sit here and lie. I mean, we, on the show every single day, we talk about having to have your own plan, having to understand what you do best and execute on that on a day in and day out basis. It's not easy. When you start adding then some financial stresses on top of that, it just makes it, multiply and stress, just becomes unbearable. So if you can take care of the bills and take care of the rent on a monthly basis, and just focus on the trades. We always talk about, concentrate on the why we're taking a trade, not the how. Everybody, I feel, especially when they're starting out, they get really intricate and they get really focused on the entries and how to get into a trade. And that becomes, an obsession almost. And they're looking for that magical combination of indicators that'll give them the profitable strategy. But it's more about the why and not necessarily the how.
What do you mean by the why?
So we like to look at stocks that have some sort of catalyst. So we're equity traders here. We primarily trade equities, not options or futures. We do have a futures trader on the floor, but on the show, you'll hear us and you'll see us talk mostly about equities. So a day trader, an intraday trader specifically, kind of lives and breathes on two things. That's volume and volatility. So if we don't have even one of those two things, it's going to be a pretty hard day. So we like to look at stocks that have some sort of fresh catalyst on the day, some reason why they're doing more volume than they normally do and are kind of moving more than they normally do. So those two things are very, very key.
Interesting. And so for yourself, whenever, it's very interesting. You start off reporting and then now you're here in trading. And so I'm curious on when you first started trading while you were working, how long did it take you to kind of grasp what you are good at? And what was that?
Yeah, listen, I mean, it's one of those things that you kind of work on an ongoing basis. So we like to, when new traders come into the floor, we like to tell them to, take a week, take 2 weeks to try everything. Try momentum trading, try, market making, try capturing spread, try, all the different strategies that are out there and possible to trade, until you come to the one that just kind of clicks and you get that kind of light bulb moment and you think, you know what? That makes sense to me. And, we work and we live in an ever-changing market. So, markets are constantly rotating in and out of different seasons and in and out of different sectors. And, it's almost like an ongoing thing. You have to have 2, 3, sometimes even 4 or 5 different things that you are good at, so you can kind of rotate into and out of them as the market is changing.
And for yourself, what are you what do you specialize in yourself?
We were talking about it just before we came in here a little bit, but it's hard to avoid these little tiny micro cap, sometimes small cap stocks that are in the news on a day in and day out basis, kind of gapping up sometimes hundreds of percents, 200-300% on a day on some not necessarily earth-shattering news that ends up being faded. So I typically lean on the short side of things, typically in those smaller names, simply because it just makes sense to me. It's, if you go to a daily chart, if you go to a weekly chart in these stocks, you'll see, a picture of weakness. You'll see a stock that's trending to the downside. It's just, lower lows after lower highs. And then every once in a while, you get that one day that kind of pops up out of nowhere where there's a press release and it ends up being kind of a non-event. And it's just a matter of, finding those levels that you can work off of and looking for that short trade.
Absolutely. And so when someone's listening to this, they're probably like, okay, great. I'm going to look at these stocks that are just POS companies that just die out every time. So do I just short them? Obviously, it's not that simple, just to short them right off the bat. So just to give some insight for someone who might be thinking that, what should they really, like if they want to become a short seller themselves and they want to try short selling, what any couple of maybe 3 tips that you would give them if they want to go that route and maybe go, you know what, I'm going to look at high volume, high volatile stocks that are fluff news, that aren't really have a good daily chart. Any advice for those people?
Yeah, absolutely. I mean, there's a few things. We touched on one there, and that's go out to a higher time frame. Whether it's a daily chart, whether it's a weekly chart or even a monthly chart, you want to see clear weakness. You want to see a stock that's just breaking to the downside. Any kind of support level has just been taken out and it's just a straight line southbound. So that's point number 1. Once you get that, you look for those individual days that are kind of gapping to the upside into prior resistance. That's the big point. You want to see that prior resistance holding on a higher time frame as resistance. And then it comes down to, what is the news? Does the news actually change the fundamentals of the company? Does it miraculously overnight make, some company that's not profitable overnight a profitable success? If the answer to that question is no, then it's just a matter of where are your levels? What is the price action telling you? And where can you get involved? Point number 3 that I would throw at you real quick, Alex, is just going to be, if you're looking at it in the pre-market, this is one thing that I've kind of adapted recently that I wasn't necessarily doing before this, but have tried to put it into my kind of repertoire now. And that is, if you're seeing a trend to the upside, so a sign of strength in the pre-market specifically, I'm hands off until that thing shows me that it wants to break down. So I want to see that big, ugly red reversal candle and then start shorting those bounces into that support or resistance.
That's a really good tip. I'm glad you shared that with a lot of people, because and guys, if you're listening to the show right now, I need you to know this is why I brought Brendan on, because you can tell that he's just trying to share information with you. And if you check out their YouTube, that's what you're going to get to. So just to highlight you guys again on that. But, I'm curious real quick on what was your personal challenge for trading? Like, did you have something that was, some people have like one or two quirks that they just need to work out to find what they need to be consistent. Did you have one? And if so, can you explain?
Sure. I mean, it'll sound probably similar to a lot of people. And I keep looking off to my screen here to make sure I'm still actually in a trade that is not working right now. So bear with me. It's going to sound very similar to a lot of people's story. And that's going to be simply coming from a world where you're managing your own money or trading your own account. You tend to develop bad habits. One of the reasons that I kind of reached out and wanted more information, wanted more training, wanted more education was to get to that next level. I got to a point on my own where, it wasn't working. I would try one thing, jump to another thing, jump to another thing, jump to another thing. And it got to a point where, you blow up one account and you think, you know what? I need more information here. I love this. I love the markets. I love trading, but I need more information. So that was key. That was really my big turning point, was reaching out for more information and more education. And that kind of got me on the right path. That being said, once I came to Day Trade the World, came to a firm and started trading, it still took a lot of time trying different strategies, trying different ideas before you really catch your footing and really understand how you operate as a trader and as a person, because it comes down to your personality. Everybody's very, very different. Everyone has a very different risk tolerance, and that only comes through when you start to trade.
Absolutely, and it's interesting. You said you're in a trade right now, so I definitely know what that feels like. So let me tell you this, man. What's interesting is what you said right there is, at first you were frustrated, you were hitting the wall, and then you decided, once, you can only blow up accounts so many times, right? And then you're like, I want to go look for more advice. So you entered the world, which is very interesting. And you went straight to a prop firm. So I'm curious, like, what do you feel like the prop firm was able to do for you in terms of, was it nice to see other traders like in the same room with you? I don't know if that's the setting, but if it is it something where, was it, how the whole adage of you could be easily influenced, sometimes in a good way, sometimes in a bad way, but 100%. Were you influenced in a positive and negative? Like, give me an experience for someone who's like, well, maybe I'm interested in a prop firm.
Yeah, it comes down to like-minded individuals. And again, everyone's different. Everyone's going to take from different situations, different things, right? So for me, being surrounded by like-minded individuals, being able to, talk through a trade when it's not going well, or talk through an idea even for a trade when it's not necessarily going well, is so key. And when you're sitting at home, you just have computer screens in front of you. You might be, involved in some sort of online forum or online community, which is great as well. But there's nothing really that matches that one-on-one kind of conversation that you can have when you're on a trading floor. And I'll just, producer Lucas behind us here, I'll get him to swing a camera around so you guys can actually see the floor that we are on. So the studio that I'm sitting in right now is kind of at the back of a trading floor. So we're actually on the floor here. Sadly, there's no traders here because of what's going on in the world at the moment. But yeah, there you go. A little bit of a look at the trading floor that's very empty, unfortunately, at this point.
Hey, it's funny. You mentioned that it's very, working with someone with like-mindedness. My question that came up as soon as you said that was, I could definitely see a benefit in that because, they can help you out. They can give you advice. They can help you during those hard times, because it's rare to talk to someone in your little circle of life who knows trading, right? Like It's really rare. You can't really relate with someone who's working 9 to 5 and say, man, I just lost X, like it just doesn't make sense.
Yeah.
So my question is, but was there times where, and maybe it's handled there where y'all think properly, but is there times where you'd be in a trade and then you get someone's advice and they'll shake you out of your own trade? Does that make sense?
Yeah, no, you hear all kinds of good stuff on a trading floor, and that can happen. Absolutely. You can be involved in a trade that, multiple people are in the same idea, maybe not the same entry, maybe not the same kind of risk tolerance. And you hear kind of chatter in the background, and it makes you kind of rethink what you are doing. But it really comes down to having a plan, sticking to that plan and executing on that plan. It's so important, and I keep saying that over and over again, but it's so important to, before you even hit a key, understand where your stop is, what your risk is, and how you're going to execute on the way out then.
And just to add to what you're saying, I mean, the reason that's so important, and you let me know if you feel the same, but it's okay if you lose consistently if you stick to your plan every time, because then you'll have consistent data on like what you're doing. So you'll know what not to do in the future. But if you're constantly wish-washy and just jumping in, jumping out, and not really sticking to a plan, then you're going to have mixed information.
Yeah, 100%. No, you hit it right. You hit the nail on the head there. No, it comes down to, and I'll take it one step further, even in saying that, if you're looking at a stock, you're kind of hunting an entry, you're watching the order flow, you're watching the time and sales, you'll get that feeling. You'll get that feeling where you think, I've seen this before. I know what happens. I know what to expect next. And that gives you that extra confidence to maybe not only enter the trade, but maybe put a little bit more on, because you still have that out. You still have that, that safety net of where your stop is. But maybe if you recognize the price action and you recognize what's happening on the level 2 and what's happening on the time and sales, it just gives you that confidence. It's really hard to explain, but you just get that warm and fuzzy feeling. You know what I'm talking about?
Absolutely. I absolutely know what you're talking about. And you mentioned level 2, and when you start to get that sense that you recognize something, my question is, for you yourself, are you more of a I would say, of lack of a better term, like momentum trader or scalper, or are you more of a intraday swing trader yourself? Because I know you like short these crap companies sometimes. Yeah. So what's your end on that?
It comes down to, I think it's a combination of a few things. Obviously, if we're in a position that is working well for us, but there's obvious signs of maybe in my case, I like shorting stocks, but there's obvious signs of strength coming in. I might have a plan to have a 20% out, a 30% out, and maybe a 60% out. But if the level 2 tells me different, I have no problem taking it all out, even, whether or not I'll be wrong in 5 minutes or not. It comes down to, having the ability to have, the one great thing we have here at Day Trade the World is direct market access. So our trading fees are basically non-existent. I've made how many executions today? 82 executions on the day. My fees are $4.09. It's not a problem to get out of a trade and then immediately get back in again if you're working on a platform in that sense. But to answer your question, I would say a combination of both scalping and kind of holding for that bigger move, because you always want to have that little bit extra on if a stock's going to go, $1 more or $2 more. The worst thing you can possibly do is take off a nice winner, maybe a 2 or 3 to 1 winner, but then see the stock continue for another $2 or $3 in the money.
And so speaking of that, because we just talked about having a plan, sticking to your plan, but then you mentioned if you see something during that plan, you're in a good trade, but the tape is saying one thing, maybe the volume's coming in with heavy buying and you're short, you would be willing to take it then and there. So what's to help that trader who does this? Because I'm sure there's a lot of traders who do this, and then they're kind of like getting upset because it goes further their way, or it goes against them, and they're like, yeah, I want it, but then it's like, how do you balance that emotion right there, where maybe you cut it before your plan of a profit, and then it continues to go that way?
Yeah, and it comes back to just what I said before, and that is being able to see that the plan is still there, see that the setup is still there, and just get right back in again. We're all human. We make mistakes. If you see something that you don't like on the level 2 or the time and sales, and you get out and, it turns out that it's just, maybe somebody trying to prop up a level, the bid drops immediately and price continues down, in my case, then you just get right back in. You kind of reevaluate and say, you know what, my level's still there. Maybe it's a little bit further away now, so I have to cut my size in half or even more, but the trade's still valid, so I'm going to just jump right back in.
That's good advice. I like that you said that, because I like that you specifically said my risk is still there, like wherever it originally was, and so you have to size in differently instead of just getting revenge because I took it out too soon, and then sizing in more.
I think that's such an important point to make. And when people first start in trading and kind of dabbling in the markets, they tend to set up trades backwards. in a risk point of view where it's, I like the price here, so I'm just going to get in, and then I figure out where I'm wrong after the fact that I'm already in. People should be setting up a trade starting with, where am I wrong? So if I get in right now, where am I wrong in this trade and have to cut it off? And then you kind of work backwards from that and say, okay, if that is my out, how much can I afford to, put on as far as size, and obviously risk is associated with that. But people need to start thinking of trades that way instead of, oh, I like this right now, and just jumping in and then saying, oh crap, where am I wrong? And then kind of working backwards from there. You got to flip those two.
Absolutely, because if you don't, you're going to be on a slippery slope, and you could be holding the bag. You could be easily holding the bag. So, one more thing before we go into the closing bell round, I wanted to ask you something. You brought up level 2 earlier, and then we started talking about it. So my question is, do you feel like level 2 is important for your style of trading? And if so, do you also, it's a two-part question. Do you feel like level 2 can fake a lot of people out?
Yes and no, and I'll explain. When it comes to actual order flow and actual volume that is going through the market, you have to be looking at a level 2. It's an absolute. I know people coming from the retail side of things tend to get sucked into the chart aspect. Retail platforms are typically very visual. They look very nice. They have great charts. And the indicators are endless for those charts, but a chart is only going to show you what has already happened. Like it's only showing you price that has hit the tape in the past, right? So if we want to see what's happening right now in the market, you have to be looking at a level 2. Yes, it can fake you out in the sense that, if I'm looking at a certain level as far as resistance goes, and maybe we get a test of that level, they will always, it seems like, especially nowadays, push it through and then come right back down. So they're going to try and stop everybody out, and then it comes right back down, and that offer will refresh. So you kind of have to be flexible. We talk a little bit on the live show about having an area as an out instead of, a hard line in the sand. Yes, absolutely, use stop losses, but it really comes down to what is price action looking like when it gets to that price. So if I'm in a trade in $1.50 or $4.50 or whatever, pick your number, is my stop, my out. I want to see what price is doing when it gets to that point. If we get to that $1.50 level and offers just vanish and there's nothing but green on the tape, they're buying it right up through, then yeah, I'm probably going to hit the trade out. Yep. If we get to that price level and you're seeing offers starting to stack up on the offer side of things and resistance is clear, bids are getting hit, they're starting to drop, prices coming back in, that makes you like the trade even more, and you might even add at that point then rather than looking to get stopped out. So you kind of have to see what is happening at that point in time in that moment.
I love it, man. I love that you share. It's so detailed. If you need to go rewatch that answer, because there's so much you gave in that answer, and some things that people are just going to gloss over that I did when I first started trading is anytime you pick up a new thing like level 2, yeah, you'll be like, oh man, I like what he said. I like, refreshing the bid or the offer and stacking action. But one of the key things that Brendan mentioned is it's at a key area. It's at a key resistance, a key support area. Like that plus the ask, plus the time and sells, all together, that confluence, correlation, all of that acting together is going to help you make a clear decision. It's not just one thing versus it's everything. So I really appreciate you saying that.
Yeah, you and I are not the only ones looking at that specific price, right? Like everybody and their brothers is going to be looking at that specific price. So yes, something significant is going to happen when it gets there. What that event is up to the markets.
Well, look, Brendan, let's close out with the closing bell round. You ready?
Sure. Yeah, let's go.
Here we go, my friend. What is your favorite book that helped you in trading? And it doesn't have to be an actual trading book.
Helped me in trading. That's a great question. What was that movie that came out? There was a movie about there's a couple of guys from Canada, actually, that it was about Flash Boys. Thank you. Sean is off camera helping me out there. Flash Boys. The great book, great movie as well. Not necessarily about trading or strategy or managing positions or anything like that. But when it comes to actual market structure and understanding how markets operate, check out Flash Boys.
Perfect. And what's your best trading memory?
Trading memory. I mean, there's so many. It doesn't have to be a huge winner. It doesn't have to be, something that made you a whole bunch of money. It comes down to, having a plan, executing the plan, having the trade go right for you, gaining confidence from that event happening, and then being able to take more the next time that you see it.
And what was one aha moment that you've had? Just name one if you had. Yeah, one aha moment. Yeah, when trading the market.
An aha moment. I think maybe the first time that, I was in a small cap or in one of those little teeny tiny companies that was gapping up and went out and did the work myself, found those levels myself, and had confidence because I went out and did the work myself. Very, very important. Came up to that level, held, turned on a dime, and started working for me. So the first time that whole concept kind of came together, I thought, you know what? I get this. This makes sense to me.
Nice. And if you have one, if not, it's fine. What would be your favorite indicator if you do use one?
I try to avoid them at all costs. Honestly, there's so much to understand and there's so much to look at when it comes to the market in general. It's just adding something else to look at. But I mean, the one that we use around here most commonly is VWAP. Volume weighted average price, obviously, is just, some area, again, that there's going to be a lot of attention paid to. There's going to be a lot of people looking at it because it's so popular. So probably VWAP.
Understand. It seems like, because just off this conversation alone, Brendan, it just seems like you're more of a price action volume. Like you use a standard, what you're given, price action volume, time and sales and tape, which I love to hear that.
No, you gotta go into what the market actually is, and that's going to be what's happening right now, this second, not necessarily what happened a minute or 5 minutes ago.
And finally, where is the best place if they want to ask you questions personally or want to get to know you more? How can they do that?
Yeah, anywhere on social media. We are all three of us, Neil, Sean, and I, all on Twitter. Neil, Sean, Brendan at TraderTV Live. You can check us out on Twitter. You can check us out on the live show. Come check us out every single weekday, 9 a.m. to 12 p.m. Eastern. We are on YouTube, guys.
Perfect. Well, Brendan, hey, man, I really appreciate you being here today. I know there's going to be a lot of value that these listeners are going to be able to take away from this conversation. So, again, thank you, man, for being here, my friend.
It's an absolute pleasure, Alex. I mean, this is what we're doing. We're trying to kind of lift the curtain, give people, an actual perspective of what the markets are like and what trading is like. So it was a pleasure.
Same here, my friend. Hey, guys, I just want to take a moment to share with you some awesome news. I just started a newsletter, and you're probably like, what's so awesome about that? Well, it's not your typical newsletter because I'm going to give back to you, the people who subscribe to the newsletter. Number one, you will be getting updates on my YouTube exclusive videos, the podcast episodes, and articles and blogs all about trading. But how is it different? I'm going to give back to you guys. I'm going to select randomly different subscribers who are in the newsletter and give them either the opportunity to have a one-on-one call with me. Maybe I'll give them a free trading book, one of my favorite trading books, just to name one, Trading in the Zone. And also, and not only, because there's many, many more ideas that we're going to be doing and implementing. But another idea is maybe win the Billions box set. There's a popular show on Showtime, Billions. If you don't know about it, definitely look it up because it should be everyone's favorite show if you're a trader. At least it's one of my favorites. So I want to give back to you guys because you guys mean a lot to me. And I just don't want to only provide content, but I want to say thank you, right? And I provide content by saying thank you, but I also want to say thank you by giving back. So thank you guys, and you guys take care.